Yo, I've come to the conclusion that owning anything other than Bitcoin is extremely risky, right? If you are thinking about investing in real estate, investing in stocks or index funds, or putting your money into a high interest savings account or even bonds, right? And you thought that was safe, you thought those were safe, I have some news for you. I'm going to break down why real estate, stocks, index funds, cash accounts, bonds. I'm going to break down why holding all of those is extremely risky compared to owning Bitcoin. Before I get started, I'm going to need y'all to do me a favor. Go follow me on Instagram or on TikTok and on YouTube. Subscribe. It's going to help me reach a lot more eyes and ears. It's going to help me build the channel. So do that for me. Click the like button too. All right, let's get into it. Let's start with real estate. So, real estate has been considered one of the safest investments for generations, right? It's something you could touch, something you could see, something you could feel, right? It's tangible. Gives it a safety effect, right? It also appreciates over time for the most part. But when you actually get a piece of real estate now, the reality is quite different. When you go with real estate as your investment of choice, you're not just holding an asset or buying an asset, right? You're subjecting yourself to a lot of risk, a lot of hidden costs, and dependency on systems that are outside of your control. Let's look at the cost, right? In order to get involved in real estate, you're going to be coughing up 10 to hundreds of thousands of dollars, right? And if you're in the GTA, that's millions of dollars. And that's unless you can buy it in cash, right? If you can't buy it in cash, that means you're going to be getting a mortgage. Getting a mortgage means that you don't really own it. The bank does, right? And now you've put yourself in a debt system where the bank essentially owns your property, right? If you don't pay your mortgage, if you don't pay your taxes, the bank can take the house that you think that you own, right? That's not ownership. Next to the cost to get real estate, you have to consider the cost to maintain or upkeep the real estate, right? To upkeep the property, right? You got maintenance, you got repairs, you got property taxes, you got lawn care, you got freaking HVAC, you got roofing, right? I could go on, right? One busted furnace or flipping a broken AC can wipe out your cash flow for the year or for half a year, right? So it's like this stuff isn't cheap. It's not a freebie. It's not easy to maintain a property. And that's just talking about your own personal property. What about when we get into rental real estate now? Now you got to worry about tenants. Are they good or bad tenants? Are they going to pay their rent on time? Are they going to trash your unit or trash your house? Right? You got to take all these things into consideration. When people say rental real estate is passive income, that's bullshit because you have to wear a whole bunch of hats unless you decide to hire a property manager. But that takes money, right? That takes money. If you're not willing to spend the money, it's going to cost you time and money as well. So it's a lose lose situation there. I think the worst thing about real estate is that you have to trust a lot of people and a lot of institutions to make sure things run smoothly. You've got to trust that your tenants are going to pay your rent every month on time. You've got to trust that the bank's not going to call in your loan. You've got to trust that your government isn't going to change zoning laws or freeze rent, right? You got to trust that your currency, the currency of your country, doesn't collapse, which means that it maintain that your house maintains its value, your property maintains its value, right? That's too much trust to put into other people and other institutions. Now let's compare that to Bitcoin, right? Bitcoin doesn't require tenants, doesn't require maintenance. It's not going to call you at 2 a.m. to fix a plumbing issue. It's not going to require 30 years of payments. Bitcoin is just pure ownership, right? As long as you got the keys, you got your own cheese, right? Flipping, you don't need a bank, you don't need a middleman, you don't need paperwork, you don't need tenants, you don't need governments. It's just ownership. All you need to trust is mathematics, physics, and coding. That's it. Think of Bitcoin as digital real estate. A house is just a house. It should be just a roof over your head, right? But people have made it into a business, right? That's why housing has gotten so expensive, right? That's not a system I want to be a part of, right? I think everyone deserves housing, right? But we all can't get it if everyone's trying to store their value in houses or in homes or in real estate, right? That's why everyone or a lot of people are being priced out. There's no reason people should own hundreds or thousands of homes or doors when there's homeless people out here. You feel me? So to me, it just makes more sense, right? Bitcoin comes with virtually zero risk, while real estate comes with a shit ton of risk. That's just me, right? But now let's move on to stocks and ETFs and shit like that. So when I first got into investing, I was introduced to stocks and more importantly index funds. Right, this was relayed to me as the best way to grow my wealth over a long period of time. So outside of Bitcoin, before the invent of Bitcoin, stocks were the best performing assets in the world over the last 50, I want to say 50 to 75 years, right? But one thing I learned is that buying individual stocks is extremely risky, right? You're basically betting on one company. You're betting on a CEO, a board of directors, a group of managers to beat the entire market. That is extremely hard to do, right? Most hedge fund managers, most people, most individual stock investors do not beat the market, right? That's a fact. I'll put it up for you. I'll put up the statistics. I've always looked at individual stock picking like it's sophisticated gambling. You get what I'm saying? Like you're just betting on a company or a group of companies to perform really well, right? Sure, there's history and there's past performance, but past performance isn't always indicative of future performance, right? So a company could do well for the last 5 years, but then have a really bad year and never recover, right? We've seen that. We've seen companies that did real well over a certain period of time, but then the company blew up and they don't exist anymore. Bro, that's your money gone. This is speculation at its finest, right? You're trusting other people to make decisions with your money and hoping that it works out. So now you throw in ETFs and index funds into the mix, right? And sure, it sounds good in theory, right? You get broad exposure, you get more diversification, and you get less volatility. Cool, right? But you're still trapped in the same system as individual stocks. This time, instead of just having your risk all in one stock, it's spread out across hundreds of stocks, right? You have better chances of success, but still, there's still risk, right? You still have to depend and trust on hedge fund managers or index fund managers to properly allocate your money towards certain companies, right? And they can make mistakes, bro. They can make mistakes. And we've seen it happen before. And on top of that, you got to remember stocks and index funds, they trade in fiat currency. And we know that fiat currencies are losing value every year. So, yes, the number might be going up in terms of fiat currency, but is your purchasing power increasing? Right? Are you able to buy more things with your fiat currency? And the answer is probably no. Let's get even deeper, right? So stocks and index funds, these are considered permissioned assets, right? What does that mean? It means that the governing agencies or the brokerages, they can block, restrict, or deny you access to your funds if they feel like it, or if the government gives them a command to, right? So you don't have true ownership of these assets, right? If they could block them or block you from them. Now compare that to Bitcoin. All you need are your private keys, and you can access your money from anywhere in the world. You can send it anywhere in the world, right? There's no borders that can stop you. There's no government agencies that can stop you. As long as you have your keys, you have your cheese. You don't got to worry about earnings calls. You don't got to worry about profits. You don't have to worry about managers' fees. You don't have to worry about stock dilutions. None of that matters when owning Bitcoin. Bitcoin doesn't care about GDP. It doesn't care about interest rates. It doesn't care what the Bank of Canada or what the Federal Reserve does. All that matters is that every 10 minutes a block is created, right? So you have to ask yourself, would you rather own something that depends on hundreds of other people or something that just depends on coding, right? And it just works. It works because the code says it works. All right? That's seems like an easy choice for me to make. The truth is all traditional assets are risky. Real estate, stocks, bonds, index funds, all that shit is risky and they've been telling us that it's been safe for the last 50 years. Bitcoin is certainty in a world full of risk and variables, right? It's the only asset in the world that is truly scarce, the only asset you can truly own, and it's the only asset that doesn't depend on anyone else for it to function or work properly. Now, with that being said, Bitcoin is volatile. Yes, we've seen the extreme price movements, but it's not risky, right? There's a reason for its volatility. One, the Bitcoin market or crypto market is open 24/7. So it's the most liquid asset available, right? But two, we're trying to figure out the price or determine the price of something that we've never had before, right? And you have to take that into consideration. We've never seen anything like Bitcoin ever, right? So we're watching it grow up and mature in front of our eyes, right? So, but as Bitcoin matures, that volatility is going to decrease. So I say all that to say everything else is risky except Bitcoin. So the best thing you could do for your wealth and to secure your future is to make sure you have some. Right? Some is better than none. Ideally, you want to try and get to one Bitcoin, but get as much as you can. You feel me?